Jumping into a stock after it's already surged 44% in a week, it can feel a lot like chasing a laser dot up a wall. You know you probably shouldn't, but it's hard to resist. Most of the time, you just end up empty-handed. But what if the real move hasn't even started yet? Look, if you're in a hurry, here's the single most important thing you need to know about this semiconductor stock, Navitas right now. The stock's explosive move was backed by monumental volume, and that created a critical support level at $7.40. And we're going to break down exactly what that means for your money and the powerful technology story that has the market so excited. Oh, and for those of you who are new here, my name is DataCat. I used to be an analyst, spreadsheets, quarterly reports, the whole corporate grind inside a pretty big company. I eventually traded that in for this, a keyboard and a microphone. I'm not some Wall Street guru promising you Lambos. I'm just someone who genuinely enjoys digging into the numbers and figuring out the story they're trying to tell. And, well, sometimes making a bad cat pun. You have been warned. Alright, so let's talk about Navitas. On July 21st, this stock didn't just climb, it launched. We're talking about a closing price of $8.47, a 44% gain in just 5 trading days. But here's the thing that really got my attention. What made me sit up and, stop watching videos of cats falling off furniture? The volume. On that one day, 120 million shares were traded. To put that in perspective, that is more than 4 times the volume of the day before. When you see a price jump like that on that kind of volume, that isn't just a bunch of retail investors getting excited. That is institutional money making a very loud statement. In technical terms, it's a classic breakaway gap, and it's one of the more powerful signals you can see on a chart. It tells you the game has changed. So, why all the sudden conviction? Why is big money piling in now, before any official news has been released? This is where we get into what Wall Street doesn't always spell out for retail investors. The massive price surge is happening because of the upcoming Q2 earnings release on August 4th. The market is a forward-looking machine. Traders and speculators are placing their bets now, anticipating an earnings surprise. Think of it like this. You hear the distinct sound of the can opener in the kitchen. You don't see the can of tuna yet, but you know what that sound means. The anticipation builds, and you start circling the kitchen, ready to pounce. That's the market right now with Navitas. It's pricing in the possibility of great news. This sentiment is visible everywhere if you look. People are connecting the dots. They're looking at the underlying technology and betting that the conservative analyst estimates are just too low. And what is that underlying technology that has everyone so optimistic? It really boils down to a story about the future of power itself, and 2 acronyms, GaN and SiC. That's gallium nitride and silicon carbide. Now, it sounds complex, but the idea is actually very simple. These are special materials that make our electronics dramatically more efficient. Think about your phone charger or your laptop brick. You know how it gets warm when it's plugged in? That heat is literally wasted energy. Navitas's technology, using GaN and SiC, wastes far less energy. This means devices can be smaller, they can run faster, and they stay cooler. This isn't just a small improvement, it's a fundamental shift in power electronics. This directly affects your retirement timeline, because the markets that need this technology are some of the fastest growing sectors in the world. We're talking about electric vehicles, which need hyper-efficient power systems to maximize their range. We're talking about the massive AI data centers that are consuming an incredible amount of electricity. Solar power, energy storage, these are not niche industries. Navitas is positioning its technology to be the standard that powers these multi-trillion-dollar trends. And they're also making friends in very high places. They recently announced a collaboration with Nvidia. Yes, the Nvidia, to help power their AI platforms. That's a massive vote of confidence. It's like the quiet neighborhood cat suddenly being featured on the cover of a major magazine. People take notice. Okay, the story is compelling. The technology is clearly next generation. But, and this is what Wall Street doesn't always want retail investors to know, they are not actually making money yet. If you pull back the curtain and look at their income statement, you see a lot of red ink. Revenue growth has actually been negative year over year for the last 3 reported quarters. They are posting significant, consistent operating losses. Why? Because they are spending an enormous amount of cash on research and development, on sales, on marketing. They are in a high-growth, high-spend phase. They are betting the entire house that this GaN and SiC technology will become the new industry standard. This is a high-stakes bet on future growth over current profitability. You aren't buying a stable dividend-paying utility company here. You are buying a piece of a potential technological revolution. It's the corporate equivalent of spending all your money on the most premium, scientifically formulated cat food, hoping your cat becomes an international champion, even though right now, it mostly just sleeps in a cardboard box and ignores you. So, how do you approach a stock like this? How do you participate in the potential upside without getting clawed on the way down? You go back to the chart. The market has drawn some very clear lines in the sand for us. First, the resistance, $9.48. That was the absolute high of that big breakout day. The stock touched it perfectly and then pulled back. Think of this as the ceiling. Sellers and profit takers are waiting there. A clean, powerful break above that level would be the signal for the next leg up. Now, the most important level on the chart. Major support at $7.40. This was the low of the breakout day. As long as the price stays above this line, the breakout is considered valid and strong. If it drops below this level and fills the gap, that is a major sign of weakness. So given this setup, there are really 3 primary scenarios we need to watch for leading up to their earnings announcement on August 4th. Scenario 1 is the bullish continuation. The stock consolidates for a few days on much lighter volume. It might drift down into the low $8 range, but it holds firmly above that critical $7.40 support. This coiling action forms what traders call a bull flag. It's like the stock is taking a quick catnap before its next sprint. The play here is to watch for a breakout above the $9.48 resistance on another surge in volume. Scenario 2 is the gap fill reversal. This is the bearish case. The buying pressure just evaporates. The stock fails to hold support and starts selling off on increasing volume. A break below that $7.40 line in the sand is a sell signal. It indicates the breakout has failed and the stock is likely heading back down toward the $7 level where it started. This is precisely why you must know your exit point before you ever enter a trade. And scenario 3 is the pre-earnings chop. The stock does neither of the above. It just bounces between the support at $7.40 and the resistance at $9.48 without any real conviction. Volume dries up as the entire market just holds its breath, waiting for the earnings report. In this situation, the smartest move is often to do nothing. Trying to trade that kind of choppy action before a major catalyst is a great way to trip yourself. So with Navitas, you have this classic conflict. You have a powerful story of a revolutionary technology set to disrupt massive industries versus the cold, hard reality of its current financial losses. The market has clearly placed a huge bet on the story, and the chart has given us the exact levels to watch. Your job as an investor isn't to guess what will happen. It's to understand the setup and react to what the market actually does. Watch the volume and respect the levels at 948 and 740. Anyway, that's all I've got for today. This is the kind of puzzle I really enjoy trying to piece together. If you found this breakdown useful, maybe consider subscribing. I'm still figuring this whole YouTube thing out, to be honest. Let me know in the comments what you think about Navitas, or if there's another company you'd like me to sniff out. DataCat out. Stay sharp.